buying a home in 2025, I have summarized into 7 simple steps for a first-time home buyer. Now, with most people, the first step, they'll say, get qualified with a lender. I would say, wait, not so fast. Take a step back. A lender typically will help you qualify for the maximum amount of loan you can borrow. But really, do you want to feel comfortable living in your home, or do you want to feel tight worrying about making payment every month? You know, when a lender qualifies you for the loan, they typically will look at your debt to income ratio. So they'll calculate your outstanding debt payments, such as your car payment, your student loans, compared to the income that you're making. But realistically, even though you may not have a whole lot of debt, there may be other expenses that are important to you, such as if you're going to school, you're paying for tuition for graduate school, or you may be paying for childcare, which is pretty expensive these days. You have to take that into account and calculate your budget to make sure that you're comfortable with the monthly payment that you're going to make. And mind you, in addition to the principal and interest that you have to pay on your mortgage payment, you have to also think about property taxes, which is paid 2 times a year, but you have to allow for funds every month, set it aside so that you have sufficient cash to pay it when it becomes due. In addition to that, you may have HOA, you may have insurance that you have to pay, and also be very careful. You can talk to your realtor when you're looking at homes. For newer homes, a lot of times they have special assessments, or they call it mellow rules, that are added to the basic property tax. So you have to take that all into consideration and make sure that you're comfortable with the monthly payment. So if I were you, what I'll do is that I will calculate backwards and look at my monthly budget. Say, for example, right now I'm paying $3,500 in rent. I may be able to pay about $5,800 in monthly payment if I buy a home. Then with that, I will calculate and work backwards and see how much home I can actually qualify to borrow. Good. After you've done that, step number 2, you can go get qualified by a lender. I would suggest that you talk to at least 3 different lenders from 3 different sources that you're comfortable with. First, you may want to talk to someone you trust, maybe a family member, a close friend, who in the past couple of years have worked with a lender that they feel that are good, that can help you. Second, you may want to talk to your bank that you've been banking with for a while, because they know your financial situation, and banks are typically direct lenders, and they may be able to cut you a good deal. Third, you may want to talk with a realtor. They typically have lenders that they know that are good, that they work with, that they can recommend to you. Now, why do we want to talk to 3 different people about making one mortgage loan? That's because different lenders typically have access to different rates and different programs that you may qualify for. So you may want to compare rates and the deals, the best deals that they can offer you before you make a decision. After all, mortgage loan, it's a big sum of money, and you'll be paying for a long time, and it can really accumulate up, and you'll be paying a lot in interest. So even if it's a 0.25 percentage point difference, it can make a big difference over the long term. So it's worth your time to do that. So to apply to get qualified for a loan, you would need to, so to speak, get your ducks in a row, get all your documents in order. All the lenders will ask basically the same information. So they want to get your pay stub for the last couple of months, or your W-2, or if you're self-employed and you don't have a W-2, your tax return for the last 2 years, and also provide them with your bank statements or any investment account statements that you may have. The lenders will also pull your credit report. If you get your credit report pulled within 2 weeks' time, 14 days' time, it will just count as just one credit inquiry. It's not going to do a lot of impact onto your credit rating. So after you get pre-approved, then you'll know exactly how much is the maximum amount you can borrow. Then you know how much of a home you can afford. And then with doing your budget, you know what kind of mortgage payment monthly you'll be comfortable with. So now then you're ready to shop for your home. Step number 3, shop for a house. This is usually the fun part. If I were you, I would work with a real estate professional The reason why is that they typically have more knowledge about the different neighborhoods that may fit your budget. So I know that there's a lot of information online, but instead of just relying on information online, it's better to tap into the knowledge of a professional who has been in the industry for a while and know the various neighborhoods well. And also, as much as you can see a lot of photos or even virtual tours from online websites, I would definitely make sure that you take the time and visit the homes in person and also visit the neighborhood. I would also strongly suggest that you go during the daytime as well as the nighttime for a home that you're interested in. You'll be surprised. The neighborhood's vibe may change a lot from daytime to nighttime, and you want to make sure that you're comfortable with both. Now let's face it, your first home most likely will not be a dream home. But if you find one that fits your needs and fits your budget, and it's in a good location, I would say buy it anyways. Why do I say that? That's because typically, if you look at, say, for Orange County, where I'm at, the home historically appreciate, so they go up in value about 5% a year. If you wait and want to save enough until you can afford your dream home, a lot of times the market will run away from you. You can never catch up. The way to really do it is to get into a home that would fit your need, that you can afford, and then from there, after the home appreciates, then you trade up from your first-time home gradually into your dream home. And you know that there are tax advantages and different benefits of owning real estate, which I will talk about in a different video. So this video will focus on the process for a first-time buyer to get their home. When you go shop for a home, remember one thing. When you buy, also think about selling 5 years, 7 years, 10 years down the road. The reason why is there are certain things that you cannot change. For example, if a home is less expensive because it backs against the freeway, the noise of the freeway is something that you cannot control. So you have to take that into consideration. Later on, when you sell the home, this is going to have a negative impact. Now that you found a home that you like, it's time to make an offer and move into step number 4. So make an offer, negotiate, and then enter into the contract. This is a step that a real estate agent will help you. And they will help you in terms of the negotiation and save you a lot of time, because there's a lot of steps that goes into the documentation and also negotiating and then going through the due diligence process, which we're going to talk about. Step number 5, after your offer is accepted by the seller, then you go into the due diligence process. This is a process that actually is for the buyer's protection, giving you the opportunity to inspect the house, go through the different contingencies, make sure everything is okay before you actually finalize the contract. So this is a step that a real estate agent can help you a lot. I typically help my clients with the home inspection. We will bring in a home inspector that is experienced, and I'll be there to help answer any questions, help with the home inspection process. So if you have to work, then you don't have to be there, and I'll be there to help you ask all the questions that you want to know. In addition to that, we also will do a termite inspection. Make sure there's no termites or wood infestation bugs that may damage the home. The contingency period or the due diligence period typically is about 17 days or is up to negotiation. This allows you to back out in case you find anything wrong with the house, or in case you have any issue with the loan, just in case the home doesn't appraise to the full value that you offered and was accepted, then you have a chance to back out of the contract and have no loss. Since we're buying a second-hand home and not a brand new home, there may be something that needs repair that the inspector will discover. So how to negotiate repairs? Understand that the seller has a right to accept or refuse the request for repairs. But we can also ask for an allowance so that they give you some money at closing so that you can do the repairs later on yourself. Now that the due diligence process is completed and everything checks out okay, it's time to move on to step number 6, the loan underwriting and appraisal. The lender at this point will call your employer or your HR department to verify your employment and your income information that you gave them. At this time, remember one thing: don't make any major purchase, such as Don't buy a car, don't buy furniture or appliances until escrow closes on the home, because this is going to change your financial situation, making it different from when they first approve your loan. And you don't want that. And second is that don't try to move money around in your bank account, because the lender is trying to base off of the loan approval on the account information that you give to them. So you don't want to make any big changes at this time. And then also the bank or the lender will send out an independent appraiser of their choice to go and do an appraisal on the home. Make sure that the home is worth the purchase price that you're going to pay, so that they make sure that the loan that they're going to approve to you will be of the appropriate value. So if everything is good and the loan process is smooth, then we go to the last step, which is step number 7, closing. And we will do that through a title company. The title company will ensure that a clean title that is free from any liens is transferred to you. And then your escrow company will help you record the property title in your name with the county. And congratulations, you are the official owner, new owner of this home. So if you follow the steps, hopefully it's not going to be too difficult. If you have any further questions, feel free to reach out. I'll be happy to provide a free consultation. I promise, no pressure, no obligation, just an honest chat to help you so that you can look at your situation and see what is the best way to move forward.